Welcome to my trading room. This is Atcoin, day trading, Ripple, the best elite wave analysis, episode number 19. So today I'm going to take a brief look at Ripple. I try to be brief, which means I'll try to do it in less than 15 minutes. And I chose Ripple today because it had a little pop, I think yesterday, and I wanted to take a look at it since I'm talking again about all my altcoins and why not start with Ripple. So that's one thing I want to talk about. I will talk about its Ichimoku cloud and its Elliott wave, its latest Elliott wave. And I also want to introduce to you two new indicators that I am looking at right now. So I have three indicators on the chart in the past, and I took one off and I added two new indicators. So I want to take a look of that. I took off the Heikenhachi overlay. I like looking at it, but I don't use it actively for my trading, which means I don't use it actually to take an entry or exit position. I just like how it colors the candles. I like it better than the default candles. But I took it off and I took two new indicators instead, put on the chart. So I will show you that. And that being said, I'm proposing to you to take a look at my disclaimer. But before I do that, I want to show you on the picture here. You can see a piano, and I'm a pianist, and I like pianos. That's a nice piano. This one could be quite expensive if it's a good one, and I just like it because I play the piano, and to me, it's music in my ears to seeing a piano. It wants me to stand up and sit down and play something on it. Unfortunately, this is only a piano in virtual space, and I have a nice one at my home, but probably not that nice. Anyways, it doesn't matter. I'm not the best pianist on earth, and the piano I have is more than good enough. It's a very good piano, even a professional pianist who enjoy playing on it. It has a very nice sound. Anyways, I'm not here to talk about the piano. Excuse me for that diversion, and let me start straight away with the screen share. So here you have my disclaimer, and the link is in the description, and below it my risk warning, so that you are aware that there are risks involved in trading. And I briefly will talk to you about my services, because if I don't do it, nobody will. My services are live Elliott wave updates. You get them on BTC, US stocks, and gold. It's 1 to 3 updates on Bitcoin, and 1 update on gold, and 1 update on stocks. They will cost you 20 USD a month. I also sometimes talk about Ichimoku, but not on a regular basis. If you pay with cryptos, you get a discount. It is cheaper, it's 20 USD. If you pay with PayPal, it is more expensive. It will cost you 30 USD. And if you're interested, you become a member of my free Telegram group, and let me know, and then I will provide you the instruction on how to become a member. It is also highly recommended to take offer of my limited time offer, which you have a discount for private clients. I'm talking now about one-on-one coaching, and we can talk about investing or trading, or even if you just want to know what you need to know or what you need to study in the market in order to become a trader or an investor, I can guide you, and it will make you much better, much faster, and it will save you from doing a lot of mistakes, which will only be costly for you. So it is really recommended to become a private client of mine and join my channel and have at least 1 coaching intervention with me. That's recommended. And that being said, I will take a look at XRP. So first we take a look at Ichimoku cloud, and then we'll talk about Elliott wave. On the Ichimoku cloud, as you can see, we had a pop here, especially that candle, and the following one, this one and this one, popped the price higher. And now we have to see if we would have got an entry point. So the first thing is the Kumo breakout. So did we close above the candle? And I think that this candle here, you have to look at it very close, but it's I think a centimeter above the cloud. So this candle would be a close above the cloud, and your entry point would be would be just above that candle. So you would have an entry above that candle, and on the next candle, your entry would have been hit, and you would have gone long. Because not just you had a Kumo breakout, but the other conditions were also satisfied. The future Kumo at that time was green here, as you can see. The Chikou was free of price congestion, and the Tenkan and the Kichuin were in the right order. So the Kichuin below the Tenkan and price above both of them, which is good. Now the thing is that we are again below the Tenkan, but that would not be your exit point. Your exit point would be right now on that dot, that Kichuin dot. Here, this level would be your exit point. If price goes down to that level, you would go out of the trade, according to Ichimoku. So yes, you would have had an entry on Ichimoku because all the conditions were satisfied. And I'm talking about a quite high time frame, the 3-hour time frame. So that it gives us a bullish signal. So now we can take a look at Elliott wave and see my last condition, because all the conditions I talked about right now are purely Ichimoku condition according to the Kumo break strategy. And the next condition is my proper condition. It's Elliott wave. So I want Ichimoku and Elliott wave to be bullish. So I'm going to take a look at its Elliott wave labeling, and we'll see if that is also bullish. And here, I'm not going to talk about the entire decline, but it was a WXY decline. And here you can see the end of wave Y. And that did finish the second wave of the wave 2. So now we're expecting a wave 3 up. And here you see the last part of the decline from the X wave up. So you had an A wave, a B wave, and a C wave. And the C wave subdividing to 1, 2, 3, 4, 5. I'm not talking about the rest of the decline because I think I did it in the last intervention on XRP. So now that being said, once wave 2 finished, we got a leading diagonal 1, 2, 3, 4, 5, with wave 5 entering the price territory of wave 1. So that's only possible in a leading diagonal case. And in a leading diagonal case, you also have only 3 waves in it. So 1, 2, 3, and here again for the correction 1 of 3, which is normal, but then for the impulse wave again 1, 1, 2, 3, and that one it's not so clear, but it probably is also a 1 to 3. I would probably say maybe 1, 2, 3, or you put it a little lower. Well, yeah, well, probably that counts. But it is a wave 4, and then you had a wave 5 up, which in that case, since it's a leading diagonal, should only have 3 waves in it, but you don't see them that neatly. So it does not matter anyways. It's a wave 5. And once we had the wave 5 of 1, we get the correction of wave 2. And that is an ABC. So I put the A wave here, the B wave here, and the C wave here. It seems now that we had a wave 1, 2, 3, 4, and that we still have one wave down to do. Or maybe it could be finished actually, wave 5. If it extends, it goes lower. If not, it's finished here. But we are looking for the end of the 5 waves of wave C. And a good place for the end of the correction would be the 38.2% retracement level. The 61% is also a good place, but at least we should retrace 38.2%. That does not happen all the time, but the probability that we retrace 38.2 is quite high. So I would have a target at that level, at the 0.7528 level for the retracement of wave 2. And then I would expect a wave 3 up. Now, that being said, I told you that I have 2 new indicators. So let me show you the first one I want to show you first. It's called a baseline indicator. So I don't know actually much about an indicator, but I can see how it is useful. It's like in a car. I don't know exactly how the car accelerates when you push the acceleration pedal, and I don't know how it brakes exactly when you push the brake pedal, but I know it does it. And the same thing goes with that indicator. I don't know exactly how it works. I didn't study in detail, but I can see. I was searching for an indicator and I found this one, but I can see what I want to see, and that's the important thing. So it gives me here 2 lines, and one is the bearish line and one is the bullish line. I put the bullish line in green and the bearish line in red, and it gives you a cross when they cross. And when the red line is on top, it's bearish, and you get that pink color. And when the green one is on top and the red one below it, you get it is bullish, and it gives you that green color. And when they cross, you get the blue cross. You see it here, here, and so on. So I like that indicator because it is quite close to my Fisher indicator. And the Fisher is a couple of indicators in one. I'm not going to show you all of them, but it's a couple in one. And this one, I don't know exactly what it is. Maybe I could find it out and I could take a closer look at it, but I don't mind. It's not so important to me. What's important to me is that I can read it and that's simple to read. And I quite like it because, for example, here you had the cross. So if I look, it happened on 2 candles. No, on, yes, I think it's happened 2 candles below the bottom. It gave you the cross. And that was, let me see if I'm right. That was 2 candles before my Fisher indicator told me that we're gonna go bullish. So that the new indicator I'm looking at gave me a signal sooner than the Fisher signal to go to be bullish. So it is acting sometimes before the Fisher indicator. And let's see if what happened here when he went bearish. So it went bearish at the same time with the Fisher indicator here. And in the middle, it flipped. But, and the Fisher also did flip once. So it is quite close to the Fisher, but not exactly close. And I actually like to see it because I can't see when the Fisher will flip, but I can see when these indicators, because of the 2 lines, will flip. So I find it quite useful. For example, if you look at the bottom here, it went bullish at the same time with the Fisher. So I think if you get a bullish Fisher and a bullish baseline signal, then I think it's a little stronger than if you get just one of both of them. But I just like looking at it. So for now, I have it on my chart to help me. And the second indicator is also called a baseline indicator. It's an EMI 30 HLC. HLC stands for high, low, and close, and the three values are divided by 3. So you get the average of those three values, the high, low, and close of a candle. And then you use the 30 EMA. And now I don't have it on, but I will put it on so you can see what it gives us. So it gives us actually a sell and buy signals. So the buy signals are the green cross and the sell signals are the red cross. And of course, you cannot take all of them, but sometimes it's quite useful at certain moments. For example, here, knowing that you had, knowing that firstly, Elliott wave was bullish. Secondly, Fisher went bullish. Thirdly, the baseline indicator here went also bullish because I had this cross. And finally, the green cross we just talked about went also bullish. So all the three indicators here are bullish, and that's not always the case. But here, all the three indicators are bullish. And I think that that's quite a strong signal you get to go along. And now you can see that that indicator, it gives you also sell signals. Okay, but right now, it did not give you a sell signal. Even though Fisher is bearish, it still did not give you a sell signal. So it shows you that you're not 100% bearish for now. Now, could it give me a sell signal? It's an EMA, and I don't have the EMA. I only have the cross of the EMA, exponential move average. So I don't know when it will cross. But I think that there's a possibility that if we get one more leg down, that maybe it will get you a sell signal. So should you take that sell signal? Well, it depends on how you're trading, but I don't think it's a quite good idea because you're very close to the second wave and you're expecting a wave 3 up. So even if it gives you a cross, a red cross, a sell signal, I'm not sure that that would be a good moment to go short. But in general, when you, for example, when you can see 5 waves up and you expect a correction of some magnitude, not here because it is only wave 1. But if instead of wave 1, you would have a wave 5 up here, and you would expect a correction of some magnitude. If you get all of the indicators telling you that it is turning bearish, by that I mean firstly, Elliott wave, secondly, Fisher, those triangles, thirdly, the baseline indicator down here, and lastly, you get the red cross, then you have quite a case for thinking that since it's a wave 5 and since you did not get confirmed sell signals, then it might be quite a good idea to go to exit at least your long position and maybe enter a short position since it's wave 5 and you can expect a correction of some magnitude, which is not the case here. Since here, according to Elliott wave, you only would get a small correction. But I think it can help you get better entries and exit points. That's actually all I wanted to talk about. I can take again a brief look here and tell you what I think. So here, as long as we are above the Kijun, we are still 100% bullish. And the thing is that the correction could be quite close to the Kijun. So there's nothing I can say to you more than that. But if it turns above the Kijun, it would be quite a good pace to go long. And since your best end case scenario would have been here, going long right now, as we are speaking, would not be a too bad idea, according to that labeling. Because yes, we can go a little lower, to the 38%, but we already can count in the best case scenario 1, 2, 3, 4, 5 down. So wave C actually could already be over and we could go higher. Of course, those Elliott wave counts can be adjusted in the future and it's not 100% certain. And the thing is, if you go long here, well, your stop loss should still be below on the Kichuin here. So you would not have too much space to the downside. The only thing, it would be even better if we would have touched right now the 38% retracement, but we did not. So you're taking a risk of entering before we touch the 38% retracement, because we still can go that low, but you will never get a perfect entry position. Normally, you should already be in the trade, and there was no real reason to exit it. So you should be in the trade and expect wave 3 to go up. That's your current, that's the current situation of the market. So I don't know what you think about the indicators. I think that for me, both of them could be quite useful. If you should not look always at them, but because it gets quite confusing when there are too much indicators on the chart, and you should never put too much indicators on the chart. I only put 3 in maximum on the chart. That's why I took off the overlay, the Fibonacci overlay. Yeah, but that's not the only reason, but that's one of the reasons why I took it off. But I still like the indicator. Maybe I'll in the future, I don't find this one or this one too useful, and I take one of them off and I put back the Fibonacci indicator. But right now, I think it could be a plus to my trading and allow me to better time the markets and take better exit positions and be more certain with my entry positions. So I think it could be quite useful. Let's see how it goes and if it affects my bottom line. Now, that being said, thank you for watching. I will see you soon again. Maybe tomorrow for one intervention. It is the Eastern weekend and the markets were also closed on Friday. So I should have a little more time. And if I'm up to it, I'll do one more intervention tomorrow, or I'll take the time off. It is nice and sunny, and I did spend some time in the sun today, which was nice. And it's extremely good for your health to tan in the sun, to do sun bathing. It's extremely helpful for you. So I enjoy doing that when I have some free time, like on the weekends. And during the week, I can't because of trading. Anyways, thank you a lot for watching. I forgot an important thing to show you. I always forget to tell you that, because I actually don't like too much reminding you all the time. But since I have to do it, please hit the like button so that other people can find and comment. And also, I know that it's annoying always hitting the like and comment button, but there's an app. I don't have it here on that browser installed. I have it on another browser. And let me see if I can see it on this browser. Can I? I can try. If I see it, I give you the name of the, but I'm not sure that I will see it. I should have checked before I made that intervention. Unfortunately, I don't think I see it. Yes, I don't. Annoying, but I don't. I have to make some research. There's an app that allows you to like the videos with only pressing once the button. And every time you watch one of my videos, you will automatically like it. So that's useful. And I will tell you next time. It's a little hard to find. It's an extension, a Chrome extension app. And if you press it only once, and then it will like all the videos you watch, not all the which you watch, but all the which you watch from the same channel. So every video you watch of mine, if you hit that up once, it will automatically like. I do that for all the content that I like. Every time I see something that I think is worthy of merits that I like, and I want to do something for the producer, every time then I press that app once, and every time I look at one of those videos in the future, it will always put a like on it, which is great. So I don't have to do it 10 times. I do it only once and it will. So I give you the name, and next time I'll think about it, I'll research it, and I'll give it to you. And then you can automatically like my videos. Now, that being said, become a member of my free Telegram group. It is free, and it gives you a second way of communicating with me. You never know when you need it. And that being said, have a nice weekend, and I'll maybe see you tomorrow. And if that's not the case, then probably on Monday. Bye-bye. See you soon.